Welcome to this little mini course for Chick-fil-A operators about how to review your personal tax return. If you'd like to learn how to review your business tax return, please see the other video linked in the description that is on our YouTube channel. Thanks for tuning in. It's my pleasure today to go through this course on how to review your personal tax return if you're a Chick-fil-A operator. It's around tax time right now, and perhaps you've just recently received a copy of your personal draft tax return from your accountant, and now it's time to review it. My experience has been that most Chick-fil-A operators want to review their personal tax return, but no one's shown them how to do it. And it's a pretty overwhelming task because when you get that draft tax return from the accountant, it can be very, very long. It could be 150 or 200 pages. So we're going to walk through how to review your tax return using kind of a classic 80-20 approach. We're going to review the 20% that will most likely catch 80% of the errors. Now, there's many reasons to review your tax return, but the biggest one and the one we're going to focus on today is that we want to make sure that it's correct as possible. As I said earlier, your tax return is many, many pages. You can't review all those pages, nor do you need to. There's really only a couple of pages you need to review, and there's actually only 5 boxes. So in fact, you'll spend more time today listening to this training than you will reviewing your personal tax return. But there's 2 other reasons that you need to review your personal tax return, but we're not going to be able to go through them today because this is what we do at FirmStride with the longer version of this training. The second reason that we review the personal tax return is to make sure that the tax strategies that we've employed are reflected correctly on your personal tax return. Now, don't get me wrong. It's not that we're trying to cheat. What we're trying to do is make sure the accountant has indicated correctly the tax strategies that we've used. You see, accountants aren't trained on tax strategies. They're trained on tax code. They know how to fill out forms. They do what's called tax compliance. At FirmStride, we teach tax strategies, which are ways to legally save money on taxes. But we have to make sure that when we employ those strategies, that they're displayed and reflected and recorded correctly on the tax return. So that's the second reason that we review, is make sure that everything we did actually got recorded by the accountant. And the third reason is that we want to develop the key performance indicators of how we're doing with our wealth and with our business. And it turns out that the personal tax return is the best report card you can ever ask for to tell you how well your business is running and how well you're doing at converting that money into family and personal wealth. And so just like when you're running your Chick-fil-A restaurant, you know what your cost of food is, you know what your wages are, you need to understand what those things are for your taxes so that you know if the machine is running well or you need to make some adjustments. So before we start diving into where to look to check the numbers, let me just kind of introduce in general how the personal tax return works. Understanding this is key because it'll remove all of the complexity and the uncertainty about all those PDF pages in that draft tax return. So the tax return is actually relatively simple math process. Okay, so here's the way it works. So first you start off with looking at how much you've earned. So you take a look at your wages, your business profits, if you sold any stock maybe, or the interest from your bank account. You add up all of those numbers and that's going to be your income. And then what we do is next we subtract out a bunch of things right off the top that we're allowed to subtract. Things like IRA contributions, your health savings account if you have one, things like that. Okay, so once you get your income and you subtract out a few things, the next thing you just do is you add it all up. And this is called your adjusted gross income. So your AGI, your adjusted gross income is close to how much you earned for the year, but it's not exactly because we've subtracted a few things out that didn't actually that were subtracted out of your income. But it's a good proxy. Okay, so now we've added this up. Now what do we do? Now we're going to get to deduct a few things. You get to deduct your charitable contributions if you have a mortgage on your home. Maybe you get to subtract your state taxes that you paid. You subtract a few things, and when you get all done, you get to deduct a few more things if you own a business. It's one of the perks of being a business owner. So if we had your adjusted gross income and we take out all your deductions, then what we're left with is your taxable income. This is just the number that we use to calculate your total tax bill. And it's just a tax table lookup. It's really simple. Your accountant's software just does this automatically and it's always right. So you don't have to worry about it, but that's how we calculate it. So then now we know how much you owe in taxes. Now, you get to subtract some additional things called tax credits. Like, remember, there's the child tax credit. If you have kids, you get a deduction for each one of those. Sorry, it's not a deduction, it's a credit. So it actually subtracts dollar for dollar off your tax bill. And then there's some additional credits you get to subtract too if you have them, like carryovers from previous years. Maybe you bought an electric vehicle, things like that. And then if we just add that all up, we take your total tax bill minus all those credits, what we get is your total tax. This is how much you owe. Now, you've probably already paid some of your taxes already because of your paycheck, and maybe you made quarterly estimated tax payments. So we got to account for that. So we're going to subtract those to figure out what's left. And then whatever's left is just the total amount that you owe. If you get money back, then it's called a refund. That's it. It's really simple. So it takes 150 pages on your tax return to file because the IRS wants your accountant to show all your work. That way you get full credit. But in fact, as the business owner and the person that has to review your tax return, you don't need to review all those pages. In fact, you really only have to review 2 pages. And on those 2 pages, there's really only 5 boxes that matter. So we're going to walk you through now how to do that. So let's jump to those 2 pages. So open up that PDF that you've got, and you're going to be looking for Form 1040. Now, it's not going to be the first page. Okay, the first page is usually a love letter from your accountant saying how much they appreciate doing business and how much you need to pay them. And then there's some other forms on there like the 1040 ES, which is for your estimated quarterly tax payments. And by the way, who prints those out and cuts them and sends their tax payment that way? What century do we live in? Don't do that. Pay your estimated quarterly tax payments on irs.gov because then it's instantaneous and the IRS keeps track of it for you. And they don't lose paper. Okay, so don't use the little coupon thingies that your accountant gives you. There's usually also some other forms at the beginning of your tax return because you're going to file electronically and your accountant's going to do it for you, so you have to give them permission and stuff like that. So once you find Form 1040, it's going to be maybe a dozen pages in or so. This is what it's going to look like. Now, it's not going to have those light green things, and that's because this is a screenshot of the latest Form 1040 from 2023 off the IRS website. Now, 2023 and 2024 and 2025 really don't look that different. The boxes are the same. So yours will look exactly like this, but it'll have numbers, of course. Okay, so the top section is all about you and your family. This is where you're going to have your address, your name, your social security number, your spouse's name, your kid's name, their social security numbers. This, by the way, is the section that is most likely to contain mistakes. Now, just so you know, if you're using the same accountant this year as you used last year, there's probably not an error in the section because their software just loads it from last year. If you have a new accountant, you'd want to double check all these numbers properly. This is the number one place where tax returns have mistakes. It's a typo, okay? So that's the first section, the first half of the first page. So we're already a quarter way through our review. You're going to look at it and glance at it and say, yep, that's my address. Yep, that's my name. Yep, that's my spouse's name. You probably have to look up the social security numbers unless you've got to memorize. Okay, after that, the bottom half of the first page is just your income. Well, you know what your income is, right? You know you earned a W-2 wage. That's line 1A. You know you earned profit from your business. Well, that's one of the lines. And then you know that there's other deductions and other things, that other charity and things you gave money away. So that's it for page 1. Okay, so page 2, at the bottom of page 1, by the way, is a very important number. That is your taxable income. Remember, we talked about you take your income, you subtract a bunch of deductions, you get your AGI, and then you subtract a few more things, and then you get your taxable income. The bottom of page 1 on Form 1040 is always your total taxable income, and the top of page 2 is the total amount you owe in taxes. And so when you go from page 1 to page 2, the software does its magic, and it calculates how much you owe. And so that's what that is. Well, remember, you get some credits after that. You get the child credit and some other things, so that's the top. That's that top section. Next is going to be the section where you record how much you've already paid, both through your paycheck and through your quarterly estimated tax payments. Of course, you can verify all that information if you'd like. Just get your last paycheck from the year. Also, you should know how much you paid the IRS. One of the tricks, as I mentioned earlier, is pay through irs.gov. Because if you do that, you can just log into your account and look at your transaction history, and boom, it's all right there. Okay, next we get to the balance due section of Form 1040, simple math. And then that's where we calculate how much you owe minus how much you've already paid. And then we get the refund amount, and then you sign it. That's it. You can literally review your tax return in under 5 minutes. You'll spend more time on this training than you will on reviewing your tax return. Now let's kind of blow this out in a little bit more detail. So that's kind of your orientation to Form 1040. Now let's actually get into the nuts and bolts of how we actually review this. Okay, so the first thing you're going to do on page 1 is you're looking for your personal information. Okay, you just want to verify all that. Like I said before, it's unlikely to be wrong if you're using the same account as last year. Okay, let's move along. Next thing is your W-2 wages. Okay, you probably know what that is. You probably received a W-2, a Form W-2, which reports out all your wages. But also just look at your last paycheck. It's on there as well. And you probably have a rough feel for what this is. Okay, the next thing you want to review after the wages is your business profit. That's going to be in box 8. Now, just a quick note, because you're watching this and you're a Chick-fil-A operator, your calendar year goes from December 1st to December 1st. So if you want to verify how much profit you've made, don't pull up your FCR from January to January. That's not the right thing. You have to look from December 1st of the previous year, of the previous tax year, to December 1st of this year. And the reason is because you actually don't get paid for the FCR until a couple of days into the following month. So your December FCR, not the one that ended on November the 30th, but the one that ends on December 31st, you don't actually get paid for that until like in January. And remember, when you file your taxes, it's based on when you receive money. You're filing taxes on a cash basis. So you need to look from your November 30th through November 30th or December 1st to December 1st to figure out what your business profit will be. You also will have received Form K-1 from your business. Now, you probably didn't receive it because you are your business, but your accountant could produce a K-1 for you, and that's going to have the number on it that is your taxable income from your business. That's going to be in box 8. You probably have a good feel for what that number is, so you just want to make sure it's in the right ballpark. Next, you're going to look for your personal deductions, and this is going to have things on it like your mortgage interest, donations to your church or other charities that you make, as well as if you live in a state where you're able to pay your state taxes as a business expense, or if you have property taxes. All those things are going to be on Schedule A. If your number here is not more than the standard deduction, then you're going to just take the standard deduction amount. So you either get to take the standard deduction or you get to itemize, which means you add them all up one by one and take that number because it's bigger. If you want to know what the standard deduction is for the year, here's a little hint. It's on the left side of the tax form. You see that little bubble over there? That has the standard deduction amounts. Okay, so that's what that is. Okay, now you get to take one other deduction, which is super cool because you're a business owner. You get the qualified business income deduction. This is where you get to take a percentage of your profits as a business deduction for your family. For Chick-fil-A operators, this is always going to be around 20%. Take the number in box A and take 20% of it, and that should be the number approximately in box 13. Okay, if the number is way less than that, like if it's only 15%, then you need to talk to your accountant. You probably missed something. Okay, so that's the end of the first page. Okay, so we've reviewed 4 boxes in the top section. Okay, what now? Now we're going to look on page 2, and you want to look at box 26. This is an easy oversight because a lot of people pay those quarterly estimated tax payments through a check or an ACH transfer, and so you actually have to remember to tell your accountant that you did it. If you didn't tell your accountant that you made a quarterly estimated tax payment, they probably have no way of knowing you did it unless they did it for you. So you want to make sure that all the estimated tax payments that you made are showing up as your credit. Otherwise, you're not getting credit for something you did. So you want to check that. It's unlikely that there's other mistakes other places on this tax return. Now, I want to mention that your accountant buys very expensive tax preparation software, probably to the tune of $50,000 or $100,000 a year. And that tax return software does not make math errors. So you really don't need to review the other pages or the other documents or the other boxes on Form 1040 because they're just math. They're adding and subtracting and doing things like that. The most common errors we've already covered. And if one of the boxes that we've just mentioned that you see on the screen doesn't look right, just follow up with your accountant and ask them to explain it to you. Oftentimes that will involve digging into some of the schedules and forms and worksheets that are on the tax return. But if you start at this high level and you look at the results, you're probably going to catch about 80% of the mistakes on your tax return. The second reason that we review the personal tax return is to make sure that the tax strategies that we intended to employ actually got done and that they were recorded properly and that they actually have the benefit that we're expecting. Unfortunately, today, we're not going to be going through all these tax strategies that we could use to lower taxes or how to find them on your tax return. That's reserved for the people that subscribe to the Firm Stride training membership. If you'd like to find out more about that, stay tuned to the end of the video because we'll tell you where you can get more information about this and find out if it might be something you're interested in. If your goal is to save money on taxes, specifically to save net money on taxes, you have to be very careful when you review your tax return how you feel about it, about your taxes. Let's illustrate this with an example. Let's say we have two families, family A and family B, and both have an AGI of $1 million, and they're both Chick-fil-A operators. Family A has deductions of $40,000, so their total taxable income is just that million minus 40,000. So they had $960,000 in taxable income. When you run that through the tax tables, their total tax bill was $281,325. Now, they have already paid some of that through quarterly estimated tax payments in their payroll. In fact, they've already paid $321,325. So when they go to file their taxes, they're going to get a refund of $40,000. How do you think that family feels about that? You might think that they're pretty happy because they got $40,000 back. But let's say family B makes the same amount of money, the same AGI, but instead of $40,000 in deductions, they have $120,000 in deductions because they were clever with their tax mitigation strategies. So their total taxable income is $880,000 instead of $960,000. When you run that through the tax tables, their total tax bill is $251,725. But they paid less in. They didn't pay enough through their quarterly estimated tax payments. They didn't pay enough through their paycheck. So they paid in $211,725. So they owe $40,000. How do you think they feel? Do you think that they feel worse than family A? Well, look at who paid the most in taxes. Family A did. So this just illustrates the point. It's not about how much money you get back at the end of the year. It's about how much you pay in total in taxes. So guard your emotions when you're reviewing your tax return. Remember, your tax return is a report card of how you're performing both in the business and in your family and your wealth management. That's why it's such an important document. So to get to know one of the most important rules of thumb, you look at your tax return. And specifically, what we want to calculate is not what tax bracket you're in. Nobody cares about that. If you're in the 37% tax bracket or the 24% tax bracket, that doesn't matter. What matters is your average tax rate. The way you calculate that is you take your total tax bill, which remember is the top of the second page, and you divide it by your adjusted gross income or your AGI. You can find that both of those values on Form 1040. If you take that ratio, what you're doing is figuring out what's the average amount you're paying in taxes. So your number might be 15%, 20%, or 25%. If you are a Chick-fil-A operator and you're earning north of $1 million for your AGI, your goal is to get below 20% average tax. And you want to get as low as possible. If you can shave off a couple of points off of your tax rate every single year, over 15 years, you're basically able to retire a year early. That's how significant this number is. So every year when you get your 1040, you want to calculate what your average tax rate is. And then every time you think about earning $1 of profit, you now know what percentage of that goes to cover your taxes. So for example, let's say that you're able to lower your tax bill from 20% to 18%. So if you look at the $1 million in profit and you say, well, I spent 20% of that on taxes, that's $200,000. Now I lowered that and I can now pay 18% of my profit on taxes. That's $180,000. That difference of those 2 points is $20,000. Okay, that's a lot of money. If you can do that year in and year out over the course of 15 years, that adds up to being able to retire a year earlier. That's why it's so important. And this is the third reason for reviewing your tax return is you're looking for this rule of thumb to know how you're doing. Now, the last thing you want to check for is to find out how well you really understand what you're doing. And that's on the tax return. Box number 38 is your penalty. If you have a number in that box, I don't care what number it is, if it's $1 or if it's $10,000, what that implies is you don't understand your taxes well enough as a business owner to manage them properly. You're probably relying too much on your accountant. You need to understand your taxes enough to protect your interests and to make the important decisions on behalf of your family. Your advisors aren't going to do that. The second thing that a penalty points to is a misunderstanding or a lack of understanding about how to manage your cash. Oftentimes, this is the only indicator of a problem in how you take the profits of the business and convert them into cash for your family. Now, Chick-fil-A makes this very easy because every quarter through the distribution worksheet, they show you how much you should take. But are you really doing that properly? Now, Chick-fil-A is telling you to do that, but when you move the money into your personal account, are you managing it properly, or is it just sitting there gathering dust? Are you assigning a purpose to it? One of the purposes of your income is to cover your tax bill. So if you aren't allocating the money properly, then you definitely want to make sure to talk with us because we can help you learn this. Again, it can be a total game changer and it can change the way you view money in such an amazing way. Well, I hope you got a lot out of this little mini course about how to review your personal tax return, and now you feel a lot more comfortable doing it. Let me take just a minute and tell you a little bit more about FirmStride and what we do and the types of outcomes we help business owners achieve. Our basic process has been used over 200 families where we help business owners that earn between $200,000 and $2 million a year first discover a whole bunch of new things that they wish they would have known before. This isn't training like you get it as an MBA or that you would learn at a trade school. This is how to be a business owner and build wealth. There are 6 wealth disciplines that we cover. You can see them on the screen, as well as 3 additional themes that we want to make sure all of our families are comfortable with. And our goal is to give you sufficient knowledge that you can act with independence and agency to take care of the interests and the goals of your family. We also help business owners get stuff done. We do this through our community, through support, and we also offer a coaching service with weekly meetings, project management, and accountability. And then for everybody that goes through our program, we also teach them how to maintain the system that they build with checklists, downloads, rinse and repeat things. And many members continue to take training after they're done because they want a quick refresher. Like, for example, you just watched a training on how to review your personal tax return, and that's great. Are you going to remember that a year from now? Well, the training will be available and you'll be able to come back and retake it, and it'll all click in place. In the lower right-hand corner of the screen are some of the things that people have said that have worked with us over the years. And we're really pleased to have made a difference in so many families and in their lives. Here's where you can go to find more information about FirmStride. You can go to our YouTube channel where we post videos just like this that are free and complimentary just because we want to help business owners be more successful. You can also order our book off of Amazon. It's also carried in most of the other national book retailers and publishers. And then if you'd like to find out more, we do offer 3 levels of service. There's a training membership, which is for business owners who just want training and want to implement it themselves with the help and support of the community. They get full access to all the courses, full access to all the downloads, all the tools, all those things. Some people want to actually implement for a while under the guidance of an experienced professional. And so we offer a coaching service for that. And not only does the coach act as a guide and a coach, they're also there for accountability to make sure things are done and things are done appropriately. Just keep in mind, your coach does not replace your advisors. They work closely with you as you develop the relationship and lead your advisor team. Now, some business owners don't want to implement their full wealth management systems themselves. They'd rather pay someone else to do it. We do offer a service for that, for consulting, and that's the last one you see over there on the right. Now, if you'd like to find out more about this to discuss if FirmStride might be a good option for you, head over to our website where you can request a complimentary 45-minute strategy session with one of our coaches. They'll be happy to talk with you about your situation and talk about more personal things to you, what's important and what your concerns are, to see if working with FirmStride might be appropriate for your family, or if it is, how we might be able to help. Thanks for tuning in today, and we'll see you in the next video.